Hey everybody, happy holidays, Merry Christmas, Happy Hanukkah, all that kind of stuff. It is Wednesday, December 25th. As promised, is a video if you guys can chart review. I'm going to start with Jounce, but before I start with that, I talked to people on Twitter and StockTrades. It appears people have a misunderstanding about how this developmental biotech trading works and stuff. You might be wondering, boy, he went to ADAP and went out of ADAP, in and out. I look for certain signals. I'm going to get to the ADAP chart. And a lot of times what I'll do is I'll buy and sell really quick, and I don't mean to drive you crazy. Maybe I should not send as many emails when I do that. If I don't see the signal I'm looking for to develop right away, I sell out, and I look to get back in. I take small losses. I'll give you an example. The other day I traded a stock called EVH in a breakout. My entry was a little bit high. I took a $230 loss on the stock. I stopped out. Now, I would have actually won if I didn't. I believe in quickly stopping out. I could take 10 losses in a row like that before the 11th one makes me $5,000. That's why I have well into seven figures profit over my years in trading in the market. There's a reason. This isn't any BS marketing campaign. This site's free, whatever like that. So it's no crap like that. Okay, I'll let you know. Some of the misunderstandings about developmental biotech trading has to do with there's a lot of warrants involved with it. There's a lot of pump and dump involved with it. The run-up trade relies. Okay, you guys have heard the run-up trade with Chef. His name is Chris Sheffield, otherwise known as Chef, popularized in the late 2000 in singles, like 2008, 2009, popularized a run-up trade. What the run-up trade needs is people are actually going to hold the stock believing they're going to get rich. And you know, if I was to tell people that, that would be deceptive doing that. So I want you to know a lot of times people will tell you that because they want you to hold. A lot of times they'll over-exaggerate things and overhype. And in the past, you know, willfully or unwillingly, I've been guilty of that in the past years ago. You know, whether I was caught up in hype or whether I actually was looking to pump something, you know, doing things like that. So we don't do that stuff anymore. Day and I aren't into doing that. So we're trying to rebuild our site and keep it free for as long as possible, and you know, try to get some good trades out there that you guys can make some money, and actually some education too, that it teaches some of you guys that are newer that don't understand the street hustle that's involved with these with these trades. Most of these biotechs are going to fail. Very few of them are going to actually make it long term. Kayla Calithera is one that we think will, and maybe perhaps in another audio I'll go over and explain why that is. The chart that you're looking at right now is Jounce. I announced the other day on Twitter I was along some Jounce cult follower. Got all upset at me. You hated the stock when it was free in the company. Look, I don't know if they're going to be successful with the ICOs or not. Danny thinks they have a shot. I personally don't know. There's some things the company's done I haven't liked. Okay, but I'm into trading here. I'm looking at charts, so that's the most important thing to look at. And I have 2,400 shares of this, about $8.99, roughly somewhere around there. As you can see, a couple things to look at. It's going to be here, right here in the MACD. See how that's coming upwards, the MACD? The line and signal have crossed each other and are flattening out. The RSI here has plenty of room to get up there again. This is like a broadening top. See that paint like a W or in a little bit of a valley here? Okay, so you got 1-2 valley, top kind of broadening a little bit. So this could go two ways. This could either go back to here, which I have like an 820 area and an 820 stop area on that, because I figure if it breaks too low, then you can start forming a down channel. So no trade is ever guaranteed when you're doing something, and you have to take losses sometimes if you're not right about a trade. This one here, you see this level here? 843 is going to be important, but the most important level is right around down there, 830. To this right in there, 825, and this candle here. This candle, more importantly here, because it lines up with that one. I like to line up in the chart. A lot of times computers trade these things, so see what this is lined up perfectly with the red? Right there, if I saw a break under that, that wouldn't be good. That's like 816. So that would look like a pattern that would go like this. Now it could perhaps come back up again, but what I think the odds are favorable, high probability success in this trade, getting to about 11 or 12. 12 would be outlier high. I think more reasonably $11 range, which would be up here. You're looking at a break. This is a rounding here. See, it's just higher than this level here. This gives you force, and a lot of people, you look at psychology, right, with the trade, what people are looking at. They're kind of hot for here. You can see, we missed this one here. See how this made a valley here? Similar move here, 1, 2, 1, 2. Okay, and it came, this is a little bit different, consolidating up, and then pop down, and I predict a pop here. This would be a good area to get into the stock. You can see volume trends too. See how it picks up with volume trends? You look for that right there. See, it's all kind of flat. Here's your first key right here. You might have got into the stock. Notice to the left, there's nothing going on. I'm going to go back and show you Trill in a second. I identified that chart. So you see that right there, and it starts to kind of a little consolidation, churning a little bit. Could be shorts that are looking to get in a position, go longer, turn out of their short position, whatever it happens. Here's where it actually starts to really pick up. And you can see which has been a good time to trade it in here too for a more safer trade. And these two candles right here, this one here is showing a consolidative type of hammer. This one doubles, and this one, see how this one trades inside right here? You can see that's to that doesn't show it either. So I don't think you'll be able to get it here. And you can see see how that was inside. See it? It made a higher low and a lower high. That was a candle there. And this right here is a key. You take a chance on, you would stop like right down here would be the stop, and then you go here, and then you could have sold it here, or maybe held on a little bit longer, perhaps. You see the volume trend's really good. So I'm looking for a move with this MACD here in RSI. I'm looking for this MACD to get here, here, and up there. What I'm looking for. So I'm looking for 1050, 1150, something like that, in that range to start looking at it. So now that you know, let's go back to ADAP, and I'll tell you why I've been kind of all over the place with this one. You can see the volume is picked up here. Now, one thing you have to learn about this too, ADAP has an open ATM where they're selling shares. So a lot of times, you need news. You need something that's going to drive the stock higher a lot of times. I like the chart here when it did this here, actually. Some people are saying wait to 245. I think if it gets that, it's going to break out up way over here. I think you could break maybe $1.75, 225 in that range here. It's just kind of flagging here a little bit peaks and valleys in it. This is kind of coming to consolidation. The MACD histogram, the 80 line staying up there. It's just These guys, the thing about ADAP, Danny and I are not particularly wild about this company's business plan in terms of long term, what they're doing. We think they'll probably fail in the long term. But again, we're not going to put out trading and turn around and say, oh, the company's no good. There's a difference between a fundamental look at a company and a trade look at the company. And you're looking to trade these things. Sometimes this could actually go to $4 a share and still be a fail. MRTX is a good example of one that's gone on a big run, big speculation. That they haven't proven a ton there. That could fail too. It's 120 a share or something. It's like $1.25. Would you really care all that much? I mean, sure, a lot of you guys have decent souls and you want patients to get the best possible treatment. So do I and Danny. But if you bought 10,000 shares at $1.20 something, you're not selling it at 100. There's something not right with you. At least selling half. And there's a greed problem there, and we've all been guilty of it before. So you look at the trades. Biotechs are very advantageous trades, especially a lot of these cheapy ones. I mean, they move, but they go back down. You have to understand that. So I showed you Jounce. Here's one that I'm into here, 5,000, not that big. The reason why I'm not larger on this one, again, a MACD turnaround here, looking for a move maybe right there, 275 to 3. Okay. The reason why I'm not that big on it is because they have warrants and they're a reverse merge. So much like a mistake with MGen that we made. I took a nice loss and we tried to get behind something. And that was a mistake. You got the former shell guys that are holding warrants. You got people that are chopping the stock. And on Twitter, I answered one guy about chopping stock. It means you got one guy in the merger that was allotted to his institutional clients that will allot a bunch of stocks and just keep chopping it and selling into it and chopping it down and chopping it down. And then you have the warrants and stuff, so they chop it. And there are people wondering, who gets all the volume? Where's all this stuff coming from? From warrants and shorts. Where it's coming from, they're chopping the stock. They keep allocating to them. They're getting, quote-unquote, free money, so to speak. You might look at it that way. Various trading algorithms and things that they do. Understand something. The market is about smart money manipulating dumb money. There's a lot of hustling and a lot of illegal crap that goes on. Even the SEC doesn't understand it. Fortunately, I understand it, and there's a part of me kind of wish I didn't. So you can see this MACD here is coming around here. We can see the history of this one's been pretty good. So this has got one value here. Some people might read this as an inverted cup and handle. I disagree. I've seen a couple of AIs, artificial intelligence traders, actually one that was putting it out there saying that it's an inverted cup and handle. I don't see that on that one. Let's just look at take another value. This is a good signal here. It might consolidate for a while, but I think it will break out. The question is whether they let it go from here or not. Do I want to actually hold it past there? And probably not. Now looking at it, not unless I saw a news thing. Now they have a catalyst early next year. I think in the first quarter. We listened to the call from them. They have a CEO from Dublin. She's an interesting woman, but they're all brand new management there. Actually, she's been there for a year, and the interim CFO's been there a couple of months, and the CMO's been there a couple of months. So they're trying to change some things around there. There's a lot for them to overcome, being that they're reverse merge. They actually reverse merged, and they bought a failed IPO. I think it was MILN or something. I don't remember the name of it, but it was a failed shelf. So, looking for 275.3 out of this one. I think it's reasonable we can do it on this one here at Cybex. It's got some pretty good signals. Again, one thing, before I leave this one, see the volume trend again, how it's picking up. This wasn't here. It may be getting ready to turn long and make some money off of it. So we'll see what the deal is about. Let me show you about Trill here. I have 10,000 shares left, and why I'm selling it, but I want to buy it back. First of all, to show you where I got hot in this chart. Let me go a little bit earlier so you can see it. A little bit. No, that ain't it. Yeah, you're going to have to actually stick with this one. See the valley here? Just a little bit, and a little valley up, a little bit of a W here, and it goes like this. What I look for, see that right here? What's the volume trend tell me? Look to the left. And right when this started, look to the right. See how it's increased with the greens? 1, 2, 3. 1, 2, 3. See right here? I got really hot. Perhaps I should have waited a day to get 100,000 shares. When Danny showed me this chart, I almost fell out of my chair. I'm like, they're going to run this stock, man. I was really, really hot. It's like I should have just kind of been a little bit more calm about it and got a lot of shares. They have warrants here at 96 cents. And we've seen the stock hit over 96, and then they execute the warrants. They could exercise them. What I wanted to see was on day one, when we got over $1, whether it would hold it there, whether the warrant guys would go long. Apparently not. They took it back down, and I watched some weird trading. I'm like, I went down to 16,000 shares. I'm like, I added 2. I'm like, I changed my mind. I sold 8 to keep 10. Now, why am I keeping 10? If it goes back down, okay, and I'll get to the news cycle in a second about this, but if it goes back down, I figure my average price is somewhere around 50 cents now on that 10,000. So I figured if it went down to here, 35 cents or 40 cents, I've already banked about 15,000 in profit on this one already. So I figured, okay, what's the worst? I'm going to be down $3,000. It's down 30 cents from 10 grand. Okay, I could always have an option to buy more shares. If I see a signal, I could add more shares to it, right? If Yusuf Runzi goes to $5, that's 50 grand, 40 grand, whatever, $45,000 on top of that. How greedy do I need to be? I'm trying to get into a safe zone where I'm comfortable with holding the stock. If it goes down, I'm comfortable with adding more. Something I should have done with TMRC, I made 15 grand trading. I should have made a lot more doing that. I was too quick to get rid of my last amount of it because it was OTC, and I get kind of paranoid about OTC stocks. The story on Trill is interesting. They potentially have a CD47. That's as good, if not better, in PTSV. PTSV's CD47 might not be as good as people think, but again, the market's about perception, isn't it? It's not about people like me and Danny explaining why they may be wrong. They're going to bid it up no matter what. People kind of get mad about things. They get really hot. When I say mad, I mean like crazy. So they get hot. Trill's CD47 doesn't have a CD16 binding domain, which their safety may be better. They may, and I stress the word may, have a best-in-class CD47. We don't know yet. On that, the last management was really bad. They screwed up something awful. The story with these guys was back a few years ago when the stock was, let me show you. Here, you go back, maybe is it 3 years you can find it? No, it's before that, actually. Go back 5 years. Yeah, when it was right up this area here, my understanding was they had several buyout offers for $40, $50 a share, and the old management turned it down. How did that work for them? Now, you know what you're seeing here? Elliott Wave's interesting. One, two, three. I wouldn't count this one. This could be a fourth or fifth wave. Back to that level? I mean, you realize if it got back to that level, that would be substantial if it did. It's a big if, though, isn't it? That's like over $6 a share. Is it possible it can? Yes, it is possible. They need a couple of things to happen. One, they have a Sting asset in preclinical that targets, and kind of big pharmas are kind of hot for that. They've been giving upwards of $300 million up front, up to $300 million, not upwards, excuse me, up to $300 million up front, with 500 to 700 million in back-ended royalties. Okay, Trill is not in a position to get that right now, however, and this is a narrow thing that could happen that could make it big, but you have to hit on this. They need to have some success with CD47 in the 0.7 to 1, and I like that the CEO has shut his mouth, unlike Carrots, who screwed up. These guys keeping his mouth shut about what's going on there, so it creates some speculation. To get a decent signal, they could get the stock to 4 or 5. Okay, now they have leverage. They could do a little bit of a raise, try to get the warrant guys out. They would have leverage, actually, to make a Sting deal and get a couple $100 million up front. If they had that, where they're at, based on their pipeline with their CD47, if it was successful early, this stock could go on a big run. But it's a narrow thing that has to happen. You need to have leverage to make a deal with Sting. So I like that the CEOs talk about strategic alternatives. He understands it. He comes from a background from Bain & Company, which they offshoot Bain Capital, but they're not related to each other anymore. So he has connections. He's a guy with an M&A background, so he might look to even sell the company out for maybe $3 to $5 a share or whatever. I don't know that. Okay, in order for us to get there, we got to clear. There's like 6 million warrants. We need the warrant guys out of here. Otherwise, without a news cycle, they're going to keep striking the warrant. They're only allowed there's so many a day. There's quote unquote non-dilutive warrants, which they are, but they only allow a certain amount of strikeage a day that they could do. So the last 2 trading sessions, I've been noticing that the stock it gets to 96 or a little bit higher, and then they start hitting the warrant up. So they're looking to make money there. Now the question is, are they going to turn this the other way and it's going to have a collapse and there's no news cycle? Or is there something coming in a news cycle that's going to be positive? Do you have a crystal ball? Are you an insider? Do you know? It could also work out negatively too. And, I think I've covered, I want to go in a little bit more preaching about this. I might sound preachy. I want to talk about this one, Kayla, a little bit. That Kayla is a very bullish stock. You guys know that we're big Kayla bulls. We're probably as close as a cult follower as you could possibly know. Why do I like Kayla so much? What is it about this Kayla you like? The stock don't do much. It's kind of a dog until recently. I like this stock. Well, first of all, I made $200,000 right around that, trading it up from, in and out of it between 250 and all the way up to 20. Well, I wasn't that. I was around 1450 and I started getting out of it. Okay, so that made a big run there. Why do I like it so much? It's the best managed company in a small cap I've seen, probably ever, in terms of how they're doing and approaching their odds of actually not becoming a company. That's perpetual development of a stock. It gets speculated, goes 100, which I wouldn't mind for trading, but because they're taking the necessary steps to be a successful business, they have a great jockey. You ever heard the saying, I'd rather bet on the jockey than the horse? Well, I'd rather actually bet on a great jockey than a great horse, because if you have a great horse, a great science, and your jockey's an idiot, I don't care how good the horse is. If the jockey's steering the horse right into the guardrail and it's or the inside rail, and it's gonna trip and kill itself, then you get a drunken ass jockey. He doesn't know his ass from his elbow. It doesn't make a difference how good the horse is. The jockey has to drive it. Now, subsequently, in retrospect, looking at it the other way, if you have a really great jockey and the science ain't worth the crap, I don't care how good the jockey is, the horse is going to finish last, no matter how much you whip it. I mean, it's the best analogy I can come up with here. It's probably a little bit far-flung, but, that's the one I think that comes to my mind. So Kayla hasn't proven a ton. It was our genius they haven't, but they've shown some interesting signs of A39 day, and I follow the IP on it. We follow what the ISTs are doing with that one. That's in investigator-sponsored trials. MD Anderson, MDS was very, very exciting. Now, why didn't they pump that? We have a good relationship with Jen McNeely, who's the senior vice president there. We talked to her from time to time. And we were kind of upset that they didn't really promote the MDS, so to speak. And she explained to us that that's not their core, where they're going. that they're not looking to partner 839 per indication, but they'd rather do per geography, per regional zones. They're looking at to get in with it in a niche market with RCC, a couple of lines, at least 2 lines of therapy in the Cabo combo. That's called the Cantata trial. That's going to read out sometime in the second half next year. I would estimate late July, early August at that point next year. That's a big maker. Wouldn't necessarily say it's a breaker. It could be a breaker depending on how high the stock is run. But why I don't think it's going to be a breaker. Get to this back to the MDS. Why didn't they promote that? All right. So Jen's talking to us on the phone, and she's saying, well, you only get 2 or 3 chances to pump or promote a stock. So she understands that. Then after you do that, you kind of you wear out a little bit, and you could get a bad reputation. You get a couple of mulligans. Why didn't she do that? Well, I speculate, and so does Danny, that they're working on a partnership. What I find interesting about this, right when a bio value fund started getting into this one, and one of the things bio value fund does is they play partnership and buyout arbitrage, mostly partnership. They start getting hot and heavy, and then Kayla has their earnings. They put out in their 10Q that they're looking for a partner. Now, why would you do that? I could see them talking about, why is that in your 10Q? Well, bio value fund is a form 4. They're an insider. Let's say that they didn't do that, and there's a partnership here, and they got hot and heavy. They can accuse them, in a legal sense, of trading on insider information, being that they're an insider, right? But if it's public knowledge first, or it's speculating, they can turn and say, look, it was in the 10Q. We were just speculating. We had no advantage. We didn't get any advantage. It was public knowledge. We're looking for a partner. Susan's gotten a partner with Insight, as you guys are well aware of. They had $60 million up front, 60-40 split with that. Insight made an equity investment. Susan talked about that their next deal with CD73 target, which is called CB708, their drug, would be based upon the Insight deal. Now, Arginase was kind of a very unknown target, not very speculative, and there wasn't much interest in it. Nobody really, there's like 2 of them out there. Arcus is one of them that probably stole from Kayla. They haven't done anything in the clinic. Insight's the only one doing this, and that's 1158, and 1158 might not be great. So they have CB280, but regardless, we think that the deal for CD73 or CB78 will be substantially more. What we saw the other day, on this, again, we've been speculating in the partners coming here, a 9.5 million a share trade that went off. It printed in the ECN, that's net times in sales. So it was negotiated outside the market, and it wasn't obviously, didn't move the stock right there at all. But obviously, somebody took that, and we know it came through the Jefferies trading desk, who has an ATM here. Now, do you think it's a coincidence that Kayla had an open ATM with $32 million left with Cowen? About a month ago, or give or take, they closed that up and got a new ATM for $50 million. I said to Danny, I'm like, man, they may be going for 2 partners here. Because I was looking at Insight, I'm like, wow, I don't think it's 1 partner. I do now. I was thinking it's 2. And it must be a big equity investment somebody's going to make here because 32 is not covering it. Now, you think it's a coincidence that there were $42 million worth of stock that went through there? That's just a coincidence? Could it be? Sure. It's a pretty strange coincidence if it is. And then all of a sudden this stock takes off. Did you see me that day? I just said, holy bat poop. They just went a 9.5 million, 9.448 to be exact. I'm rounding up to 9.5 million trade go through. I didn't say it was bullish or bearish. I just said, holy bat poop. Stock went batty. Think it's a coincidence too? They're going to have a partner here. They're going to have a partner here. Okay? It's not a matter of if, it's when. I think it'll announce it very early in January. I don't think it'll be this year. I don't mind if they did, but I don't think it would be. And if it doesn't, it starts going to 10 to 12. I think that 42 million was part of a partner. I think it's going to be equity investment of up to 15%. That would be 15% with the dilution counted, which they'd be a form for, a substantial position. I think it'd be about $100 million up front. So that would give Kayla $275 million. They'd be writing their own ticket. So even if the Cantata didn't work, they would have a little bit of de-risk because of their money there. So when that time comes, when the run-up trade happens with that, assuming that everything's going to be okay in the world, then we'll be able to give better commentary then. We're just too far out for that to actually give a forecast, way too far. So we'll be watching it. and we'll see. I think we'll get a good chance to de-risk if you want to sell some shares at 10 and 12. I don't have any problem with that. You're making money, you want to de-risk. I think that's a smart thing to do. So, I might be looking for that too. Not my personal account. My personal account, I have 11,000 shares. I have, of which 5,000 have been 3 years ago, and I said I would never touch them. I'm gonna ride that or die it, ride or die. So I've left that in there. I added 6,000 on the dips. So my average price is about $3.15 a share, roughly on 11,000. Looking at that, family counts about $8 a share at 17,000. Well, I was a little bit mistake there on that one. So the average price between the two is somewhere around $6. Give it right in that area there, about $6 a share. Give it. So actually, right now, if I was to sell everything, I'd be out even. I'm not doing that. I personally think, and Danny, we've studied the Contata. We think they're going to be successful. We think PFS is going to be 15 to 20 months. We think the stock by the end of next year will be trading in the $30 or higher range, barring some market things. So, no. Does that mean still that I'm not going to de-risk it? Sure, I want to de-risk the family account. They're old, and I don't want my parents worrying about stuff. Technically, it's my account, but it's still, they look at it as theirs. So I want them to be nice and relaxed in their old age. They're both in their 80s. My dad's darn near 90. I want to make sure that they're relaxed, not worrying about stuff. So that's the story on this one. The chart looks really good where we're at right now. It looks like it perhaps continue through. You had an inside candle on a shortened day, and the volume was pretty good. So we'll have to keep an eye. Obviously, I don't know why it's not showing the volume. It's not showing this volume today. It was the next day. It was pretty good. We'll see what happens with it. There's still a little bit of room here at the RSI. It's crossover line signal. So we'll have to see how that goes. So I probably did I look at the, no, I didn't show you the torque trade. Let me talk about that. I know it's been going on here. Wow, look at that Bollinger. It looks like a scrotum and a penis. Very strange. This is really tight. This thing's going to break. There's a couple of valleys in here you can't see. It's still subtle about that. This company is kind of probably going to fail what they're doing. There'll be a run-up, but people like to take gambles, different thing. We're not wild about it. But the CEO does have a habit of pumping. The MACD histogram is reasonable. Line signal, we're in a good spot. RSI is in a good spot here to actually move. This has happened because this is flattened out. And one more thing I'm going to show you here before I go. So I'm thinking $1.75 to 2 on this one in this rip here. So right there, have a little bit of pop. Actually, I'm actually looking at it wrong. Hold on. Green red here. It's this candle right here, actually. The high of this one is $1.92. The close, we're looking for something like that. Open 162. So right there across the way, that's $1.62. Looking about this is resistance, which would be about $1.92 is going to be resistance on that, where you're going to have the bag holders through there. So you're right in this area here that may be looking to get out. So we'll have to keep an eye on that. It's $1.40. I figure maybe $1.80 might be a decent shot on that one. It might go higher depending if there's a pump or a news cycle on it. So one more thing I wanted to show you. I bought options for July, just 10 of them. It cost me commissions about $1,700. Putting into it as a bet. I find it suspicious that this is completely paying out. They did a raise. It was not that big of a raise. It's 6.5 million shares, reasonably small. Now, here, look how flat. Look at these doji candles. Look at that. Look at that. No movement whatsoever. MACD's coming around. These guys have several catalysts, but RVNC success is going to depend upon how deep they can get that label on their Botox, what they can do with that. We think it's possible a big pharma might buy them before that and take a gamble on it. Now, I like to caution that it's very, very thin here what I'm talking about, and I'm basing it only on a pin. This is not based on a ton of stuff. If you look at this chart, you don't see that. The closest you see was right here. That's not what I look at. See the candles they have, they have wicks. I mean, look at this. Dead flat. You can go back and look at this chart history, right? That tells me you're negotiating something. Now, what is it? They're negotiating. Why is that flat like that? They did raises before. I don't see that. that kind of pin. This is kind of, again, has movement. See that? Kind of movement here. Up, down, up, down. It's a flat range, but it's moving. This is nothing. It's dead flat. I find it suspicious. You had a drop off to here, instantly took it back. Stop right there. Stop right there. Stop right there again. Stop. 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 Why are they pinning the stock? Could I be wrong? Sure. So I'm going to take a gamble and say the month of July, I think if it's going to be a buyout, it would be somewhere around before then. Let's see if I can put up 1,700 to make 9,000, maybe for $30. That's what I'm thinking. If I lose, okay, I lose. No big deal. I take a little bit of a gamble at it, and that's it. So probably the short I like the most is Jounce. I have 2,500 shares of that one. If I had to rank the charts, which ones I like the most, Jounce would be number one. MACD coming around, continuation off of a nice valley here. It's in a good spot right here to move up higher. So the indicator's telling me this one's going to go higher unless the overall market gets bad, which could occur. So I have a stop that's down in the low 8s on that one. Yeah, maybe lose a couple grand if I'm wrong. It wouldn't be that much, actually. It wouldn't be a couple grand. It would be like 1,700, 1,500, something like that. So you got Jounce. And then I would rank Cybex probably 2. Because again, another MACD potential come around. It doesn't mean it's going to get there, but if it does, it could pop, and this is going to be resistance right around 3. This candle here, you get hitting into a supply zone, high 290. So there'll probably be some baggies that are going to be looking to get out at this point if they didn't average down. So 293, that level there. I think it's just reasonable in this level here, 275. So I'm looking at these moving averages. A lot of times they tend to fake out. They just barely get over and they go down. You've noticed that a lot. How many times you've seen that? Failed breakups. They like to trap you. You think their computers don't know what they're doing? They know what they're doing. A lot of times the market's based on that. So Cybex I'd rank it in Torque 3. I think Torque has some good upside, but I think Cybex, the gamble is if it breaks 3, then it could go on a big run. But you just want, with 5,000 shares, pick up a couple of grand. You know what I'm saying? 2,500 a share. It goes up 50 cents, right? I figure, it's $1.35, no, $2.35. 50 cents, $2.85. I think it's very reasonable in getting that level there. And $2,500, take the money and run. Unless I see a huge breaker of news and you just, get fortunate like that. If you did. Torque, I'm thinking maybe that'll go up 50 cents perhaps. So I'm looking to split the two rather than getting big on it. If I like the name more and get big, I'm still, ADAP is on watch, going back to that. I'm looking for some signals there. It might run away from me. And let's see how this goes and how this goes for a while and where this is at, whether this keeps squiggling. Because the closer, I might want, if it trades up to around $1.45 and it's really tight, I might take a shot at it. Although then I would have a tight stop though on it. It could bust. It could break out here and get way up there. I think this one has good breakability potential, but it also has this too. I'd love to tell you there's a catch for 1995, but there's always a catch with these things. And if anybody tells you there's a guarantee, be careful. I'm going to talk about that. I know I've been going on here, but I think it's important that you understand, especially if you're new in the market. There's a lot of bull crap that's out there. There's a lot of pumping that's out there. There's a lot of hype that's out there. And remember, here's the facts versus hype. The fact is 2 out of 10 of these companies are going to make it. For every 100 new biotechs, you're lucky if 20 actually become something and actually get a developed drug and put out in the market. We think Kalo's going to be one of them. Okay? No guarantee it will be. We think so. They're doing the right thing. So just to give you that, 2 out of 10. Now, because something isn't going to make it doesn't mean you can't trade it. MRTX might never get a commercialized drug. They're working on crash mutations, got a lot of speculation, which, by the way, Kala is now designing and will have a registrational trial soon for NFR2. It's a $5 to $6 billion market, represents 17% of non-small cell lung cancer. It's very big. And actually, when we talked to Jen, she asked us not to write about that. You can talk to you guys about it, but don't write on it. So we're not going to do that. Maybe get back into writing articles and doing that too. Putting some blogs out there and every different trades. So again, there's a lot of BS out there. You'll go read Seeking Alpha or these other sites. You'll hear all this crap about how this is going to be the next biggest thing and blah, blah, blah. All of it could be your next biggest thing. You could get rich. You could make all this kind of stuff. But there's always a disclaimer. There's always, you could also go broke. Remember that when you're playing this stuff, and be smart. Don't let yourself get too hyped up. Don't get like I was for the last year and a half, which I was going through a lot of problems, both upstairs in the head and with my family and different things, where I was becoming analysis paralysis either. Get in there, jump, take a trade, stop out if it don't work, let it ride a little bit if it does, take some profit, be smart about it. You look at Trill, be smart about Trill. If Trill could go to 5, 10, it could actually be a big success. I've seen it before. I've seen stocks go from 15 cents to $50. Okay? But it's pretty narrow for that to happen. Understand that. The odds are thin you hitting that. It can happen. They have the potential to make that happen. Let's put it to you this way. They have a greater chance of making it a Trill of doing that than a piece of crap like Zizan or even Torque. Torque's not going anywhere. Okay, not going back to $20. It might go to 3-4, but it ain't going to $20. All right, the Toka chart looks okay right now. Is garbage. They're gone. Okay, every dog has its day. Every rose has its thorn. Every cowboy has a sad song. You've heard all this stuff before. They're advantageous trading opportunities. We're not going to sit there and pump it. We will promote the trade. We'll talk about how the chart looks great. We think this is going to make a run, blah, blah. If we believe in something in terms of that, we'll say it. If we think something's good fundamentally and chart-wise, we'll say that too. We're big Kayla bulls. We've been behind Kayla. I haven't sold any shares. Right now I could sell and take 40 grand. With the I have 50 options here. I can make over 40 grand right now in profit. I'm not taking it. I like Kayla where they're at. I think there's a partner. I'm 90% certain, if not higher, that there's going to be a partner. Does it mean I'm right? No. But I think I'm right, so I'm going to stay with it. Right? It's not me pumping you or telling you that you should stay with it. If you want to sell it right now, you're in at $2. Excuse me. Then you have to do what you feel is right for you. Okay? The bottom line. I could end up being right and enjoy it or be wrong. I don't think so, but that's what makes the world go around, doesn't it? So I want you guys, especially some of you guys that are new, to understand that when you're that these are trades. Don't get caught up in the hype. You're going to have the next big thing. And say you sell something. Say you sold out all of Trill. I'm keeping 10 just in case, right? Say you sold out, the stock does go to 10, $20. If you made money trading it between, don't get upset, because that doesn't happen that often. Like I said, it's very, very thin. I do think it has the potential to do it, but it's very, very narrow that it's going to get there. They have to hit it narrow. It's basically, you have to basically shoot an arrow, basically across the street. You got a house across the street, about 200 yards. You have to hit the bullseye from 200 yards away. Now, if you're a really good shot and everything, the wind's perfect and everything's right, you might hit that bullseye. Okay? So the odds are not in your favor that you're going to hit it, but it can happen. Out of all the ones that we're playing with right now, this one has the best chance to be a turnaround story. But then you had something like Keras. Give you an example. If those dummies at Keras would have just in the summertime kept their guidance, released the data, they had 5 responders, the stock would have been 4 or 5. They could have done a raise at 350, 3 to 350, 5 million shares, a little bit of dilution, $15, $20 million more. They'd be able to do the AML trial. And then if they would say, we're not going to ASH, whenever the data is ready, you're going to release it. Do you realize that they released data that wasn't ready? They were supposed to, it's 21-day cycles. They had one patient at 2 weeks. They rushed everything. They got overhyped and everything. That's poor management, what they did there. Extremely poor. You gotta look at the chart real quick on that one. Actually, the chart don't look too bad. I have options there. I'm just thinking about trading it. If I did, I probably won't tell you. Because it's like, you get a big like, what is this guy doing? An interesting chart. Maybe. Maybe. I'm starting to MACD break. Maybe. The volume trend. See, it's lower, though. I don't know. Iffy, 50-50. I hope it goes all the way to 10. They have big success with their MIC. But they're such dopes, the way they run things there, I really don't like it. So that is in terms of it being a big success. I think the management might get in the way of that, although they have potential. So that is my report. I hope you enjoyed it. I hope you have a Merry Christmas, Happy Hanukkah, Happy New Year. Be safe. If you're going to drink, please get a designated driver and don't kill anybody and kill yourself. You know, if you're going to be a drunk, at least have somebody driving you around. If you're going to be a sloppy drunk, please don't get behind the wheel of a car and drive. I beg you, don't do that. It causes problems for you and other people you might hurt. So enjoy your new year. Be safe. I'll see you tomorrow. In our chat, that basically, I'll put it in the mail here that I give you on it. Come into our chat room. We're there during the day, starting at around 6 o'clock in the morning, sometimes earlier. We're there throughout the trading session on audio. Sometimes we're off audio. We give trade ideas there that I won't actually email on, quick, day trades, different things that we're seeing in the market. So the room's really meant for active traders. So I hope to see you there and be safe. Take care. Bye.